Yes. So welcome back after the break. Shall we continue now? Shall we continue? Okay. Now, starting with section number 68, that is a cash credit. Now, what we are studying, see, first, we are studying the undisclosed sources of income, where there is a source of income. Okay, the income is showing in your accounts, in your books, but that was undisclosed. Like you cannot explain the source of that particular income, or you can, if you are explaining the source, but it is not satisfactory to the department, then in that particular cases, what will happen? It will be added in your income, it will be deemed your income, and the tax liability will arise. And what is the tax liability? 60% that we have already studied. Okay, before the break we have studied, that is the penalties was 60%. Understood or not? Sorry, the tax rate is was 60%. The penalty will also come under the penalties chapter, that will be of 10%. Okay, now section number 68, that is a cash credit, which says that where any sum is credited to the books of accounts, books of the assessee, and the assessee has no explanation about the nature and sources, and if he provides the explanation is not satisfactory to the AO, the explanation is not satisfactory. If anything happens, then it is going to be chargeable as the income of the assessee. Understood? Now, what is the unexplained loan or borrowing? Suppose someone has taken a loan or a borrowing, okay, but the lender who lends that money has no explanation from where that money came. Okay, what is the source of that money? And if he provides the explanation, it was not satisfactory, then it is going to be added in the assessee's, in the assessee's books. Understood or not? In the assessee's income. But what is important, when it is deemed to be satisfactory, when the explanation offered is deemed to be satisfactory, only when it provides the explanation and sources, and also it is satisfactory in the opinion of the AO. AO is whom? The assessing officer, the department. Okay, if it is satisfactory to them and he offers the explanation and source of the sum, then it is deemed to be a satisfactory, and it is not added in your books of accounts. Now, same way in the class 11th to 11th and 12th, you have solved the questions of accounting the share application money, first call, second call, share allotment money, all those things, share premium. So in the case of closely held company, means the private company, okay, the sum so credited consists of application money, capital, share premium, and expression shall be deemed to be satisfactory only if the resident person, who is the resident person, explains the nature and source, and in the opinion of AO, it is satisfactory. If it is satisfactory and you provide all the sources, then there is no need to add in the income of that assessee. It is very logical, very easy. But from all these things, the VCF, which is registered with the SEBI, is out in the explanation of section number 68. What does it say? What is a VCF? Venture capital firms. Whatever the venture capital firms which are registered with the SEBI are out of this explanations. Okay, if they are putting some money and do not explains the nature and sources, and is not satisfactory, these are the provisions which are not applicable to them. Why so, we will discuss some in some other classes. Not Today is not the right time to discuss all these things. Okay, now coming to section number 69, which talks about what? Unexplained investment. Till now we have seen the cash credit, unexplained cash credits. Okay, now we are going to talk about unexplained investments. Like you have made some investments, but you do not showcase that particular investment, or you cannot show the source of the money from which the investment is done. Okay, if you explain that as well, it is not satisfactory to the AO, then it will be added as your deemed income. Everything is going to be same. See, in any previous year, assessee has made some investment which are not recorded in the books, and assessee offers no explanation of the source, or if he offered, it is not satisfactory to the in the opinion of the AO, and it is going to be taxed as per the deemed income. As it is, no issues, easily clear. Now, section number 69A, unexplained money, etc. Same way, if you have any money, jewelry, bullion, other valuables, okay, which was not recorded in the books of accounts, either you have not provided any explanation or provided the explanation but it is not satisfactory, so whatever the money, bullion, jewelry or other valuable items that you have will be deemed to your income, will be deemed to your income. Everything is written same thing, same lines, each and everything is going to be the same, just the items are changing. First the invest cash credits, then investments, then now money, bullion, jewelry, okay. But here the catch is what, mere possession is not enough. If you are in the possession of that particular asset, then it is not enough. You have to be the owner of that particular thing, okay. You have to be the owner of the jewelry, you have to be the owner of the money, okay. If you are not the owner or the owner of the jewelry or the money, so on that basis that you have the possession of those things, those income will not, those things will not be added to your income. To add it in your income, it must be a important factor that you must be the owner of that particular item, okay. Mere possession does not say that you are the owner and it will deem to be your income, okay. We will not understand that, okay. Now section number 69b, same way, amount of investment that are not fully disclosed in the books of account. You have made an investment, you have bought a, suppose a piece of land, okay, of 50 lakh rupees, okay, of 50 lakh rupees. You have shown in the books of account in 10 lakh rupees because that was the white money that you had, okay. For balance 40 lakh rupees you paid for the, you paid from your black money or the cash amount, okay. But in the books of account it is shown as the 10 lakh rupees of the investment that you have made in the piece of land, but you have not showed the 40 lakh rupees of the amount na. This is what it is saying, that where the in the previous year assessee has made investment or is found to be the owner, bullion, jewelry or other variable, and AO finds that the amount actually spent exceeds the amount recorded in the books, that you have spent 50 lakh rupees but you have only recorded 10 lakh rupees in the books of account, then the assessee will ask you, and if you have no explanation of the sources, or if you give the explanation but it is unsatisfactory, then in that particular case it will be deemed to be your income. Understood? That 40 lakh rupees will be your deemed income. Clear? Understood? Very easy. Everything is going to be the same, okay. Same way, unexplained expenditure, you have done some expenditure, but now if someone is asking you, the AO is asking you what is the source of that particular expenditure, okay. Suppose you have done a Thailand trip, but for the Thailand trip whatever the expenditure that you have shown, okay, that was not satisfactory to the AO. Like you have done so much expenditure but your return of income or your bank account shows the little bit of the amount of those particular expenditure, means you have some cash, you had some cash from which you have done the transaction, but you are not showing in your return of income, means there are certain expenditure which is not explained, which is unexplained, and you cannot explain because that was done from the black money, that was done from the black money. So in any previous year the assessee has incurred any expenditure and he had no explanation or unsatisfactory explanation about the sources of such expenses, then the AO can treat it as a income of that previous year. And now the question note is that what, that whatever the unexplained expenditure that you are done na, see in the PGBP, if you remember, for the expenditure what you are doing, okay, or some any other head, if I take for any expenditure that you do, you get the deduction of those particular expenditures. Yes. So whatever they are saying, they are saying that whatever the unexplained expenditure that you are doing, on which we are imposing the 115 BBE section and taking 60% of the tax, you are not allowed to take any deduction under any head of those particular expenditure, because that was done from the black money and we do not allow any kind of deduction from those amount. Okay. Now the important, that is section number 69D. All those are okay, just you can read it, but section number 69D, on which some questions can be framed, and section number 69C also there are one or two questions that are framed. Okay. Now question number 69, sorry, section number 69D, which says that any amount that you have borrowed or repaid on hundi is just a negotiable instrument, okay. Yes, you have already studied in the CA intermediate in the negotiable instrument act, okay. What is the hundi? In hundi is just like a negotiable instrument. You borrowed some amount from the hundi, okay, and the amount is repaid. See, borrow on the borrowing there is no restriction, but on the repayment there is a restriction that you must repay that amount, otherwise than through account pay means you have to pay otherwise through an account pay check. Okay, if you are paying otherwise through the account pay means, if you are paying otherwise through the account pay check and the amounts so borrowed or repaid will become a deemed income means you cannot pay other than account pay check. If you are paying other than account pay check, then it is going to be your deemed income. So other, do not pay by the cash method, do not pay by the normal simple check. Okay, it must be a account pay check, then only it is allowed. Otherwise the repayment is done by any method. See, the borrowing can be done by any method, it is allowed, but the repayment is allowed only by the account pay check. Normal check is also not allowed, cash not allowed, UPI not allowed, nothing is allowed. Only the account pay check is allowed. If you have not done that, then it is going to be your deemed income, and in the amount repaid, whatever the amount you are repaying, the interest paid also become the part of the amount borrowed, and it will be clubbed. So whatever the amount borrowed, suppose the amount that you have borrowed is 10 lakh rupees, but the interest in accrued on that is 5 lakh rupees, suppose 5 lakh rupees, so 15 lakh rupees is the total amount that you need to repay. So this whole 15 lakh rupees will become what? Your deemed income, including the interest part. Understood? This is how easy these sections were. Section number 68 to section number 69D. I hope it is clear to you all. Easy. Shall I move forward? Now, coming to the miscellaneous points. Coming to the miscellaneous point. Salary head deductions. Okay, you already know that under section number 16 and in the intermediate as well, the salary deduction, the standard deduction were allowed of 50,000 rupees. As of now as well, it is 50,000 rupees, but there is a twist for old tax regime. But if you are going for the new tax regime, that is the default tax regime, it is now changed to 75,000 rupees. Okay, if you want to take the salary head deduction, then for the default tax regime it is 75,000, and for the old tax regime it is continued to remain at 50,000 rupees that you have already studied in the CA intermediate. Is this point also clear to you now? Coming to the house property head deduction. House property head deduction, I just want to make you clear by this particular chart. All whatever it is written, it is just presented in this particular chart. Okay, now see, there is an important topic that you have to understand it. See, in the intermediate you have seen that there are two kind of a house property. That is, first is a self occupied house property, and another one was the let out house property. Understood of this? This was very much clear to you? Yes. Now, in the self-occupied house property under the old regime that you have already studied in the CA intermediate, you were allowed the interest of the loan taken up to rupees 2 lakh rupees, and no carry forward was allowed in that period. Yes, interest was also allowed up to 2 lakh rupees. Yes, but for the let out, there was no such restriction on the interest. Yes, the interest was allowed up to the no limit. Whatever the interest on loan you are paying, you can take the deduction, and losses can also be set off up to 2 lakh rupees and maybe carry forward. These are the old law that you have already studied in the CA intermediate, and these already exist as well if you are opting for the old regime. But now there is a twist that when you are shifting to the now it's the default tax regime is what new regime, and you are not shifting out of the new regime, then in that particular case for the self occupied property, now no deduction of the interest or loan is allowed to you. No deduction shall be allowed to you in that particular case. Understood? Secondly, for the let out, earlier in the self occupied, 2 lakh rupees was allowed, but in the new regime it is not allowed. But for the let out property, earlier as well, interest allowed with no limits. Here as well, interest on loan is allowed with no limits. But earlier there was a 2 lakh rupees of the up to 2 lakh rupees you can set off and carry forward. But now here no carry forward or set off is allowed under the new regime. So this is all which you need to understand. Now tell me one thing, important thing. Do you understand that in the CA intermediate, while calculating the house property questions, you say that there is a gross annual value which will reduced by municipal taxes, whether paid in India or outside India. Okay, this will come as what? Net annual value. Out of this net annual value, 30% of standard deduction was allowed under section number 24A. Okay, and then interest on loan was allowed under section number 24B. After that, this is what your house property income on which you need to pay the taxes. So just remember the 30% standard deduction is still allowed whether you are in old regime or the new regime. It is going to be allowed to you. Understood. For the interest part, we have already discussed. Clear? It is clear. Now you can read this part. We have done all these discussions. We have done all these discussions. For the self-occupied property, the NAV is going to be the nil that you have already studied for up to two house properties. Correct? In the CA intermediate. Shall I move forward? This chapter is going to be over very soon. Within 10 to 15 to 20 minutes, we are going to over this particular chapter. Maximum 15 more minutes. Just tell me, is this point clear? Shall I move forward? Yes. Concept of partial integration of text. Concept of partial integration of text is important topic. What does it say? That see, where an assessee, that is whether an individual HUF, AOP or BOI whose total income includes the net agriculture income. What is the net agriculture income? Net agriculture income is the agriculture income minus expenses for earning such income. Okay. Then means if the total income includes the agriculture income. Okay. Then the concept of partial integration will apply, and the agriculture income is also got taxed. Agriculture income is also got taxed. But the conditions are, what are the conditions? When the agriculture income is also got taxed, condition are net agriculture income is should be greater than 5,000 rupees, and means simultaneously both the conditions you need to follow. First condition is what? The net agriculture income should exceed 5,000 rupees, and the non-agriculture income, non-agriculture means other than the agriculture income, it is exceeding the basic exemption limit. If both the conditions are fulfilled, then only the concept of partial integration will apply. But sir, everything I understood, but just tell me, in the 7th schedule of article 246 we have understood that there is a three kind of a list, where the first list is what? The union list. In that union list there was entry number 82, where which gives the power to the central government to impose the taxes on income. But other than the agriculture income, the power to take the taxes on the agriculture income lies with the state government. But here we are saying that agriculture and the agriculture income is also got taxed. How is it possible? Because it is against the constitution. Because the constitution provide to the central government that they can collect the taxes on income other than agriculture income, because the agriculture income is a matter of the state. So how can I take the taxes on the agriculture income? This is the question that you must ask. You were studying this particular concept since intermediate, but I don't know how many of you got this particular question. First, there should be a question that how it is going to be taxed and why it is going to be taxed, because the constitution does not allow that. Okay, now the answer to your question is this, that the concept of partial integration of tax it is not about taxing the agriculture income. They are not taxing the agriculture income, but with the help of agriculture income, they are just increasing your tax liability. I don't understand. I don't understand. Just repeat with me and listen to me very carefully. That agriculture income is not taxed under the concept of partial integration. But what we are doing, we are just including the agriculture income so that your tax liability increases. So without adding the agriculture income, how my tax liability is going to be increased? Will increase. Okay. Now see. Step one. See, what is the steps to calculate the net agriculture income? Is the partial integration is what? First, you have to compute the tax on both incomes, non-agriculture income plus the net agriculture income. Compute the tax on the total income first. Computed. Now, as per your perspective, as per your knowledge, the net agriculture income should not be taxed. Yes, it should not be taxed. And the basic exemption limit benefit should also be given to them or not? It should also be given to them or not? Yes, it should be given to them. So we are saying that the net agriculture income plus basic exemption limit, whatever the amount is, it should not get taxed now. Compute the tax on that particular amount and reduce it from the first step, that you have computed the full amount, you have computed the full tax on the total income. Now reduce the second step from the first step, that whatever the income that should not be charged to tax, first we have computed the tax on that particular income, and from that and from the total tax of the total income we are reducing that particular income, that is step 1 minus step 2. So it increases my tax base, but reduce, but do not take tax on the agriculture income, because see, on the net agriculture income whatever the tax it is, we have already reduced in the last step. So actually we are not charging the tax on the net agriculture income, but we are increasing the tax base due to the agriculture income. Who is earning the agriculture income along with the non-agriculture income, and non-agriculture income is greater than basic exemption limit, so he must be giving some excess tax, okay, or the tax which is at the higher side, okay. Understood clearly? So it is just increasing my tax base, but it is not actually charging the any tax on the agriculture income. And there is a question, one or two questions, that is in your second chapter, the exempt income, we will do after the concept of this particular chapter, then you will able to understand how this particular thing goes around. Okay, clear? The last part of this particular chapter's concept is coming as the case laws. What it is coming? The case laws are coming. Okay, shall I move forward? Shall I move forward? Yes, case laws. Up to 5 I said I'll make you understand after the PGP chapter. Okay, once I have to communicate some things related to the PGP chapter, and then I'll go with that. Okay, point number 6, where I will not study the case law name, means it is not at all important, but some case laws are important. I'll tell you what are those case laws, of which your the name should also be remembered. Okay, now the point number 6 is not important. Okay, in this particular case law, in no name should be remembered. Okay, as of now, from 6 to 10, 6 to 10 there is no name that you need to remember. Okay, just listen. First issue in the case, what does it? Does an overriding charge on profit amounts to diversion or application of income? Whether there is a overriding charge of profits. What does it? The charge was created by an overriding title in the sale deed itself. See, in the law chapter, in the intermediate, you have studied about the charge now, that the company can create a charge on their particular assets and obtain the loan from the bank. Yes, the charge is clear to you. So providing the charge on the profits, whether it is a diversion of income or the application of income, it is a diversion of income. Okay, meaning the income never legally belong to the assessee. Whatever the income that you are showing, it is not belong to you. It is going to the banks to pay off their loan. Okay, so if there is a overriding title in the charge of the profit, then in that particular case it is a diversion of income. It could be asked, and there is a question also on this particular case law, so it must be known to you. Now, can a HUF continue with only one male member? Only one male member. Yes, the Supreme Court says that yes, a HUF can continue with only one co-partner male member. One co-partner male member, if it is left, yes, it is still a HUF. It does not cease to exist. It is valid if only one male co-partner is left. Now, if is income obligated to be paid to the third party under a partnership deed considered a diversion of income? Do you understand this? The same thing is also given in the diversion of income case law. Sorry, in the concept where the diversion of income is written, there is an example given. Do you find the same example it is asked here? It is a diversion of income now, because it is obligated and it is under the partnership deed, means the agreement is also there. So it is, yes, it is a diversion of income. Understood? Now, when does a person legally obtain the specific age? Do you remember a circular of CBDT that the person who attained the age on 1st of April 2026 will be deemed that they are achieving the age on 31st March 2025 itself to obtain the higher side benefits, to obtain the higher basic exemption limit benefits? Yes, the same thing they are saying, that if the person is born on 1st of April, so it is not considered that he will become of that particular age on 1st April, but he will attain the 60 years, 70 years, 80 years of age one day before that particular date. If I was born on 1st of April, suppose I was born on 1st of April, my actual age, suppose my actual age is suppose 24, so my age will be on of 24 on the 31st March itself, not 1st of April, because the year is completing on 31st March itself. Understood? Understood. So there is a 1 day gap. So a person attains a specific age on the day preceding their birthday. Whatever my birthday, the day preceding that I have completed the full age. For example, a person born on the 1st April attains the relevant age on the 31st of March. Understood? This is why the same, it is concluded by the Supreme Court, then only the circular of the CBDT came. Why the circular came? Because of the ruling of the Supreme Court. Okay, now the last thing that we have already studied, then can a loan be taxed as unexplained cash credit? We have seen under section number 98, loan or borrowings, unexplained loan or borrowings. If the creditor source is unclear, yes, the burden of the proof is on the assessee. If the assessee cannot explain the sources of fund, then it will be treated as unexplained cash credit, and it will be deemed a income of the assessee, and they have to pay the taxes on that particular income. Okay, tell me whether it is clear to you or not. The concept of whole chapter of basic concept is now clear. Now we have to move on to the question and answers, and let me show you some question and answers. Okay, for the basic concepts. Okay, the question and answer, first you have to try on your own. I'll make you solve each and everything. What is the first thing in the lecture? What I have said, that first we will complete all the concept, and then in the separate lecture you are going to get the question and answers of those particular chapter. Okay, so in the separate session, I am just concluding here. In the separate session you will get what the concept, the basic concept, question and answers. We are going to complete in that particular one session all the question and answer, but for that I want you to solve it by your own. These are very simple question and answers. For the marginal relief, I have already given you the examples. You have to solve by that only. For question of, for normal tax liability, you have to compute, because it is a very easy, and you have already computed in the C intermediate. So first a try must be given by you. Okay, so first try yourself, and then afterwards I am going to solve that particular question. So take a break. If you want to continue the lecture tomorrow, you can continue the lecture tomorrow. Okay, because first I want that solve all the questions, and then I am going to solve in the class by tomorrow. Okay, understood? Is this clear to you? It will be added in the basic concept chapter itself. Understood? So first try all these questions, then I'll going to solve all these questions with you. Okay, take care, bye bye.